Welcome traders to this week's analysis of DXY. My name is Vic. Let's see what has been happening. Okay, so I've been already sharing my in-depth analysis. So this one is not going to be in-depth analysis. This is more of a kind of an update. So we have been looking at this structure that market has been creating for quite a while now. So the market has hit this particular demand zone and it also actually hit this FCP zone. And if you have been following my analysis, remember 89.89 was the level that I posted in August, and maybe in December, it was kind of confirmed that market was going to hold that. And so far, it has been holding pretty nicely, and the market has started to go upwards on DXY, and that's what we have been expecting. Now, in my previous analysis, I showed you a different perspective of looking at the same market. So this is more like structure based, like triangle, wedge, whatever you call it, trend lines, whatever it is. I said this was broken, this was testing, and this was breaking up, and that's why the DXY was going to go higher. And we already knew about these levels few months ago. If you have been following my analysis, this is what we have been looking at, all of these levels, especially these yellow ones. We have been monitoring these yellow ones for weeks, and then market started to go upwards. In our room, we also said that this could be like another W pattern, and market could actually hold this 90.742. And since then, the market has been starting to going up. It has reached this FCP zone, which we have been monitoring for weeks now. And so what do we expect right now? What we expect is that market can actually fall down, because these FCP zones act as what? They act as barriers in the market. So you can call them like a resistance zone, but they are not actually resistance or support zone. None of these lines are support and resistance, the usual support and resistance. But you can treat them as support and resistance, because now market has come into this zone. They can be moved down for a day or so. If the market starts to go higher, then we have another FCP zone right there, and it can show some reaction and fall down. If it continues to even go higher, then we are looking at 92.95, near about 93 area, because that's where we have this 200 moving average. And you might have noticed already that we also have this W pattern forming, right? So this is the W pattern forming, and this is what we have been looking at for quite a while now. So when W pattern forms, the market is bullish. When the W pattern completes, the market is bearish. So right now this is forming, and that means it is bullish, but it has completed here. One of the W patterns has completed here. That's why it can fall down a little bit, but I'm not expecting that to be a huge fall. I mean, nobody knows exactly how the market is going to react, but you see, if the market starts to go down, then we will be monitoring these levels once again, 91.601, and this yellow line, and all of these levels are still intact. So it can actually fall down a little bit, but if it continues to go higher, right, then I'll be looking for a better short opportunities if it actually gives me a one. I'm bullish on dollar. So this short opportunity, any short opportunity that I'll take, will be just for short duration. I will not go for extended profit targets. I will only be looking for extended profit targets in case of long position. I'm already long from here, and I've already managed my positions to reach particular this level, because I knew that once this level was held at 90.742, I knew that market was come to into this FCB zone, because a W pattern was forming like this. So what do we expect? First thing, if the market can start to go down, then we are looking at 91.601 as the next level, and that is a possibility because the market is in FCP zone and it has created this W pattern. If the market continues higher, then we are looking at this particular FCP zone, and especially this level here, which is 92.351, and that can push the price down into 91.914. So you see, once you have reached the next level, you look at the lower level. Okay, if that level is also broken on daily basis, then we are looking for 92.953, which is this yellow line, which is this 200 moving average. And after that, we are expecting downward movement, which can be a little substantial as well. So until then, my bias is bullish, but I will be able to take few bearish opportunities as and when the market gives me indication of. On this side, you see, most people try to read it in different way as well, so I'm trying to present in different format as well. So you see the market has broken through this trend line, and now it has come to this previous structure here, and that is why the market can actually fall down a little bit. But you see there is a better structure around here, that's why it can go a little bit higher, which is the same as this FCP zone, right? And if it reaches there, then it can start to go down. So that's what we have on DXY here in this analysis. Let's go drill down to even lower time frame to see what kind of opportunities we have. So the market has come into this FCP zone, as we can see, and there was a rejection. There was kind of indecision here, rejection and then indecision. So we'll have to watch how the market opens, whether it starts to go down to the next level at the bottom, or it starts to go upwards into this zone. Depending on that, if you're a short-term trader, if you're a day trader, then based on the confirmation you get on either side, you should trade. Never trade without a confirmation. Never ever trade without a confirmation. Most of the retail traders, they are emotional. What they do is as soon as the market starts to go one way, they'll start building their positions and that way. And when the market reverses, they'll start to build the position opposite way. And there is another category of traders who are opening position on both sides, trying to see, okay, which one works out. No. If you want to be a good trader, if you want to do it professionally, whether you're doing it part-time or as a hobby or whatever, but if you want to do it professionally, then you must learn how to do multi-time frame analysis. You must learn a perfect methodology, and you must own that methodology so that you can implement that any day of time, any hour of the time, any week, any month, any year, right? It should be that consistent. So you cannot just start guessing, if the market goes this, then I will do this. No, 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 no. You should be able to pre-plan your trades, your trade opportunities. Your analysis has to be predictive, but your execution has to be reactive. Okay. What I mean by that is, you will say, market has very good chance of reaching here. Market has reached this particular point, which had a very good chance. You see, market has reached there. Okay, that is the prediction. But if I want to take a short or long from here, because both opportunities are available right now, that will be based on my entry confirmations. And reactive means, you will say in your mind, you will plan it like this. You will say, if this condition happens, then I will take short. If this condition happens, then I'll take long. And this is going to be my stop loss. This is going to be my profit. That's the reactive execution. But your analysis has to be predictive, because if you cannot predict using the structures and patterns, then what's the point in trading anyway? So hopefully this has been useful to you. If it was, then hit the like button, and in the comment section below this video, let me know what you think about this analysis and what is your opinion. If you enjoyed this analysis, found it useful, share it with other traders, right? Share it with other communities, trading communities as well. And I'll see you in the next one. Thank you.